Good morning, everybody. Welcome to the Flow Show. Oh, there we go. Still haven't shut my sport down yet. Right, let's shut that off. Cool, let's do that again. Good morning, everybody. Welcome to the Flow Show, and something new going on today. We are live streaming to Twitter, X, whatever you want to call it. I'm getting feedback, so let me shut that up as well. All right, let's try again for the third time without any interruption. Yeah, we're streaming live on X Twitter this morning, so we're giving that a go. If you're watching us via Twitter, welcome to the Flow Show. If you haven't seen us before, you can come and join us in the Zoom chat room, and you can put up any comments you want to do on that side as well. Morning, K-Man. Good weekend, mate.
Morning, Ryan. Morning, everybody. Yeah, busy. Wow, what a weather! Yesterday wasn't really very pleasant, so we stayed inside, just watching television and having a glass of wine.
Yeah, it was awful day on the weather. Oh, quite horrendous. But sun's out this morning. Don't know if it's out where you are, mate. But it's a bit better today.
Yeah, it's much better.
Good. Sun always brings a smile to your face on a Monday. Right, let's get cracking on with the show, get through the news and headlines. Going to start off in China. Not a lot of news out from there. The PBOC kept its 1-year MLF rate unchanged at 2%. So that's no further changes to any of their rates thus far. We had the LPR left unchanged a week or so ago. Over at the SNB in Switzerland, head Bod Schlegel says that the central bank's main tools are policy, interest rate and forex intervention. Recognises the safe haven nature of the Swiss franc, and said that the decline in the global economy hit Switzerland harder due to the currency's appreciation. This moved the market a bit on Friday. The Swissy moved a bit on Friday when said that they cannot rule out negative interest rates. Now, that was a bit of a repeat at the end of October. The same sort of line was mentioned, but that seemed to move the Swissy, as I said, on Friday when that comment came out. Over in the UK, the FT are reporting some dour news via the CBI. It should be mentioned that the CBI is always more glass half empty than glass half full. They said that UK businesses are cutting back on growth plans after the budget was passed and all these tax rises come along. They say it's going to be hitting employment. A lot of firms may look to cut a lot of the workforce to mitigate that rise in national insurance. So warnings for the future on that front. We've had BOE's Lombardelli out saying that the UK economy has made good progress on disinflation. Has no decision on what rate paths to use. Very helpful. Says the UK economy has a similar structure to much of Europe, and they're looking very closely at the trends going on in Europe. Speaking of Europe, apparently the EU and China are close to an agreement over electric vehicle import tariffs. That's according to an MEP over there. This is something particularly Germany would like to see resolved as quickly as possible. Their autos industry is in all sorts of a mess over there. I was talking to someone, family member, who's heavily involved in that side of things, and it's not good news from there in the auto industry over there. Over in Spain, bit of data out. We had some PPI data this morning. If I can find it, where are we going? We haven't got Spain on there for some reason. Oh, yeah, here we go. Year on year, PPI down 3.9%, month on month down 0.1%. So disinflation still going over there, though maybe not as fast as it was. Back to Germany, and things are still looking soggy over there. All the metrics for the IFO Business Climate Survey came in lower, although expectations did manage to beat what was expected, but it still dropped on last month. So following the zoo as well, the PMIs, things are still not looking any good in Germany. ECB bods have obviously been out and about, and here's the kiss of death if ever you heard one. ECB's Nagel and Villeroy on Friday said victory over inflation is within reach. I wonder how that one's going to bite them in the arse sooner or later. Villeroy followed up by saying he's very confident they will sustainably reach the 2% goal. They should reach it earlier than expected in 2025. The European economy is achieving a soft landing, and we are not behind the curve today. I don't even know where to begin with that one. Kay, victory laps all round, it seems, from Mr. Villeroy.
Yeah, depends on which curve they look at, you know. Maybe just abandoned the road. Yeah, I think they try to push the markets in believing that everything is okay, and let's wait and see. 2025 hasn't started yet, so it's going to be an interesting watch, and timestamp what they have been saying over the past days.
Yeah, exactly that, mate. Exactly that. Nagel also followed up as well, and he said that PMI data confirms that Germany is stagnating and that the start of next year will be complicated. That's a polite way of saying they'll be screwed. It says we need to wait for the next projections before discussing the rate cut size. Now, that's a particularly dovish comment from one of the big ECB hawks, and obviously being German, they're always more on the hawkish side. So he's not, I'll take from that comment, he's not averse to going for a big cut if the projections say that they need to go that way. It says maybe we'll see further rate cuts in the coming months. There's probably a probability that they will do. ECB's lane, monetary policy should not remain restrictive for too long, and for once he didn't waffle on about wages. ECB Centino, one of the doves, says inflation is on target, but the economy is struggling. I prefer that we move in a gradual, steady way. Says a bigger cut can be discussed in a downside scenario. Says we need a strong economy to prevent undershooting of 2% inflation target, and must focus on inflation not falling below target. I think given the growth outlook at the moment in the Eurozone, that's going to be easier said than done. And just beginning to wonder whether the ECB are going to have to start chasing the economy lower with rate cuts going into 2025. Over in the US, we'll just go over the data that we got last week just to catch up. A few bits and pieces out. First of all, we had, Canada, we had their retail sales numbers out, which wasn't too bad after all, month on month coming in as expected, 0.4%. But core sales, stripping out autos, coming in a positive 0.9% better than expected. Obviously, this data is lagging because it's September data and we're nearly at Christmas, but there you go. Then we had the PMI, the S&P Global US Manufacturing and Services PMI numbers. Manufacturing went up over last month by 3 pips, so all good there. Services, that was a very decent beat of expectations at 57. Now, what was interesting within the S&P report was the potential Trump effect, where particularly on expectations and forward-looking indicators showing that the Trump win has improved sentiment. And the thing with the US is sentiment plays a huge part in the economy. If everyone's more chipper about what's the outlook moving forward, that can lead to an increase in activity. So it can be self-fulfilling confidence over there in the US. So a positive start post-Trump, the first sort of data we've had that has the Trump effect in there. We then got the Michigan numbers coming in as well, the final numbers, a little bit softer on the headline, coming in down at 71.8, so lower than the flash number, but still an improvement. The other metrics as well coming in a tad lower than the flash number as well, but still mostly positive, apart from the current conditions number, which dropped a point in the end. What was interesting, though, was the 1 year CPI number stayed unchanged at 2.6%, but the longer term 5 year ticked up to 3.2%. So quite a decent jump for that number, something for the Fed to keep an eye on there. Trump, he's picked Scott Bessent as US Treasury Secretary. Now, in the long list of those that we might have been expecting, Mr. Bessent was seen as the, let's say, the less activist on things like tariffs. He's going to be heavily involved. He says he's going to be heavily involved with pushing Trump's tax cut plans, but he is also on side with tariffs. But I think he's going to be a bit more targeted. He's looking from the angle that talking about big tariffs are going to be a negotiating tool and bring people to the table, and so any tariffs are not necessarily going to be as high as might be initially announced. That's why we've seen a bit of a move this morning in the dollar. You've obviously seen dollar weakening somewhat on the open Sunday night, Monday morning, and it's been a bit up and down since then. Kay, what do you make of this new pick? Does it really matter?
I had to read up on him because voices last week were saying that he would be the most dollar bullish person coming on. But then, we had a bit of an update there. Read up a little bit on him. He is. It does explain the move that we see, especially in the euro, because Trump and some of his allies were saying that they may slap pretty steep tariffs on everything European. So the euro is recovering a bit. It's also taken as a bit of a risk-on event. If he's the voice of reason, it should be relatively decent, a decent start for all things risk, which is a bit. How shall I say? Risk is not again not even across the board. We're seeing, which is a bit of a logic move somewhere. Metals coming off because less risk and less hawkish rhetoric perhaps in the making. Europe doing better, but then stuff like Aussie and other things are still lagging. So the market, if you look at dollar China as well, is still around 725. Is still not completely on board with the whole thing. Okay, we will have to see what he says, because did he promise something to Trump? So it can always backfire those things. So I'm keeping still reservations against whatever is happening right now. But the announcement effect always gives us a pretty decent idea about what the market is looking at. So we have to watch what the market is doing, and that's what I'm doing exactly right now. I'm just watching the game and see what he says when he will take the role.
Yeah, absolutely. I was wondering myself this morning why the reaction is. Yeah, he was meant to be, a bit less harder on the tariff front, but I didn't know maybe some of this move was who didn't get the job as much as who did get the job, because obviously that guy Walsh was in the frame, ex-central banker, and touted maybe to take over from Powell in 2026.
Walsh apparently says that he would prefer to be at the Fed than at the Treasury.
Yeah, so maybe, I don't know, maybe that's a bit reaction. Irrespective, whatever the reaction is, the market's moving, price is going to do what price is going to do. And we'll look at those levels and prices in a bit more detail in a couple of minutes. One thing for your diaries, May 15th and 16th next year, the Fed is going to be looking at its framework. So it's looking at monetary policy strategy, its tools, and that might include, or probably will include, how they are going to forecast inflation, or what way they're going to judge inflation. At the moment, they've got a 2% inflation target. There's going to be, it's nothing for now, but keep it in your diary, because there will be talk over whether they're going to change their targeting process for inflation. Do they make it a range, a 1 to 3% range? Do they go back to AIT, which seems to have dropped off the front pages since they announced it last year? So that's something just to keep an eye on. We'll probably start picking up the headlines on that front, probably, maybe March, April time. Over in the Russia-Ukraine conflict, Putin was out late in the afternoon on Friday, just to remind everyone that there's risks going into a weekend, talking about new missiles that he's got, new weapons that cannot be intercepted, and they're beginning serial production of these missiles. We also had the Russian Missile Forces Commander, that's a title and a half, saying that the new missile can hit targets throughout Europe. The FT also report that Russia is now using Yemeni mercenaries to fight in Ukraine. I'm sure they'll love going in there in the middle of winter. But yeah, so he's putting in North Koreans, and now apparently he's putting in Yemeni mercenaries as well. Does that insinuate he's running short of troops, or is he keeping his own people in the back pocket while putting others forward? Who knows? But this risk event is still rumbling on, and we need to keep that in the back of our minds as we're trading through the week. That's round about it from the headline front. Kay, unless you've got anything else you want to add?
Nothing more. Nothing more.
Nothing more. Love it. Always love it when there's nothing more to add. Right, let's have a quick look at what's coming up this week on the data front. Not an awful lot today. We get a couple of regional surveys coming out. It is a bit of a housing week this week. Tomorrow we get house prices from the Case-Shiller FHFA. Then we get the US Conference Board Consumer Confidence number. That's going to be a fairly big one as well. And I guess we'll have to check the survey date on that one again, mate.
Yeah, absolutely.
Yeah, so we'll see if that encompasses the post-election noise. New home sales after that, and then we get the FOMC minutes, which shouldn't be too much of a market mover, given how many times we've heard from Fed bods since the last FOMC. Wednesday, we've got the RBNZ expected to cut by 50 basis points. So the fact that they'll cut is pretty much a done deal. It's just going to be how much they cut by 50 expected. I think it's more going to be a case of the forward guidance they issue going into next year, what they're going to do further with rates. Later on in the US, we get durable goods, revised Q3 GDP, so that one won't be too important, I shouldn't think, unless there's any big variations in that. Jobless claims, which you always keep an eye on. Chicago PMI, that one is often, or can often be, a bit of a market mover, seeing as subscribers get that 2 minutes before it's officially released. Then we get PCE data as well. So that's going to be a follow-up to the CPI data that we got previously. So keep an eye on that one, see if it follows the same sort of path. Not an awful lot going on Thursday. We get the Eurozone economic sentiment numbers, and that's about it. Nothing through the US, because obviously it's Thanksgiving, and it's potentially going to be a bit of a messy one this month, because it's obviously coming right on month end as well. Kay, you got any early indications what's going to happen?
Well, looking at the equity performances over the course of the month, we may expect some. I'd say we should expect some dollar selling for the month end, but it may, as you rightly say, it's Thanksgiving, so will the build be done on Wednesday, which may then clash with some US corporate interests? And yeah, I think it's going to be a very messy one. Not even sure I'm going to really trade it, to be honest. But yeah, in theory, I'd say a bit of dollar selling, but then yeah, how much will be done on beforehand, you know?
Yeah, and if you're in our chat room, then you'll know that we often have what the end of month models are predicting from the usual sources. It's not something you can ultimately rely on, but it gives you a good idea of what may happen. It'd be worth watching the clock as well, probably tomorrow, Wednesday, particularly through Europe around the hourly marks. If you start seeing some, 10, 15 pip moves, 10 minutes, 5 minutes before the top of an hour, it's likely that it might be some end of month moves as well. So just keep an eye on the clock the next 2 days. On Friday, not a lot out either, but we do get the flash Eurozone number, and that could be a bit of a big one for the ECB's next meeting and what they do with rates. So that's going to finish Friday, but it's probably going to be fairly quiet because the US tend to take the Friday off as well when it falls like that for Thanksgiving. So Thursday, Friday might be a bit quiet, headlines permitting as well. Right, that's what's coming up this week. So let's have a look at what's been going on in markets this morning. I'm going to start with euro dollar. Technical perfection, really. 105 was the big level, banging on about it long enough. We broke, we've held it now twice, potentially 3 times in this last move. These holds are coming over a pretty short period of time. So doesn't mean we should trust it too much, but technically we're holding this 105 break. On the other side, this line here was the 2023 low, the last time we came through 105. We had an extension, if I can get it, down to that level there. Okay, we broke through it last week when we had all that big move down to the 103s. But today, that's where we've held the line this morning. So bit of a tight range we got here, 104.50, 105. Really, we're going to have to take direction by which way it goes. There might be enough to trade the range, but if we're moving under 104.50, then we're probably going to head back down towards the big figure, 104 at the least. Get back above 105, it needs to clear 105.30 before we can even think about a push up towards some of the other levels, back towards 106. 105.30, so 105.50, 60, this line right in the middle is going to be the next one if we get above that 30 area. This is a bit of a zone here. At the moment, though, longer term, we're not cracking this trend at all just yet. This was a strong bounce, admittedly, but it looked like a fast bit of overreaction there. So when you get moves like that, you can't really trust the levels in this speedy move, but watch them again on second, third tests if we come down here again and test them out to see whether they're going to show up again as levels. But for the moment, this trend is not for changing. Looks like rally sellers are still evident and well at play in this one. Dollar yen, this one's calming down a little bit. I'm getting the feeling. We had a little test down towards this support, which is really becoming a big pivotal level at the moment. This 105, 153, 30, 40 level. You can see we've had a lot of action around it and we couldn't get through the last couple of times. Moves on the upside, though, they're being a bit limited to the 155 at the moment. What is important, though, is that we had this high, then we made a lower high. So there is the potential to see more of a solid top forming, perhaps more of a top than we've seen since late September. Okay, so if we hold strongly here, 155, that's going to do a lot for cementing the top, but it needs to get under this 153, 30, 40 area. If it can't, then it keeps this momentum in play, and maybe we're going to look at the high levels. Now, one reason why this one's going a little bit sideways, I think, is because what's happening in yields. Last week, we were getting a lot of dollar moves, and even when we got that move in euro dollar, it was nothing to do with yields. Yields were staying steady, particularly in 10 years. So that was all a euro move last week. And the same goes for the dollar. The dollar has been relatively steady. If you look at other pairs like Aussie dollar, Kiwi dollar, they are all relatively stable, while 10 years have been going the same way. The difference is, though, that while we've moved off this 450 high, come down a little bit, we've got this gap. If you're one for gaps, keeping things on the soft side, it's a bit of a curve move, because at the shorter end, 2 years, we're still up towards recent highs. Okay, so the shorter end doesn't impact dollar yen as much as the 10-year can do, but it's, you don't rely on these correlations 100%. But the short end is looking a bit more firm in the yield sense than it is down the longer end. So that's another reason just why the dollar may just be entering a period of consolidation. Whether that lasts and that's it, now we know Trump's cabinet until he actually takes the hot seat, I don't know. Obviously, we may still get tweets and headlines from Trump himself in the interim, but perhaps we might be just seeing a bit of consolidation building for now. You got any thoughts on these yields, Kay?
On the yields itself? No, not really. I think we've done the most of what we wanted to do now. Looks as if quite a few positions may have been cleared, but on the tip of my toes, I'm not sure whether there is a lot more to do. But again, as I've been saying already a couple of times, we are entering the year-end period, and being delayed due to the elections. Obviously, I think we have to really take into account what the asset managers, the money managers, the sovereign funds, do they need to rebalance some bonds? It can still get a bit violent into year end, but as for the trend itself, I think we are roughly, I've been saying that since really 420, but I think give and take somewhere 420, 4.5 on the tens. I think we're sort of in an equilibrium level. It was a bit optimistic to want to look for too many cuts. But I don't think that even if Powell said that they want to be cautious with cuts, yeah, you always have like moves trying to reprice and trying to adjust expectations. But I do think we are in a bit of an equilibrium zone here. So I don't think there's too much of a reason, especially looking forward to the new Trump presidency. I don't think there's too much reason to go back below 4% unless we see real economic data starting to slow down in the US. But do we really want to take yields up far through 4.5 back, let's say up to 5% before he even takes a seat? I don't think it's warranted either. So to me, we're in an equilibrium zone. Translate that to what you were saying on dollar yen. Yeah, we're probably going to jump up and down. We still do have a Bank of Japan meeting as well in December, but I think we are kind of in a range now. Yeah, 153, 40, 60. It's on many pictures. It's a relatively important zone. Bit of a trend line support there as well. I think then you talk about the 152 again. What I think, if we look at the whole picture, if you go on to, let's say, for instance, a daily or even a weekly on the dollar yen, we are stabilizing at high levels. If you look at it in the longer run, okay. I mean, we are give and take 4 or 5% below the top, but I mean, that's still pretty lofty levels. So I think year end will be the dominant factor now. Do the market need to readjust their dollar holdings into a year end? That's possible. Though let's not forget what happened in the end of 2023, where we saw virtually 2.5 two full months of dollar selling. Now it's been that's been shortened by the election. So yeah, there's still the potential of big moves. And then, as we've been going on about those levels, watch that 153.5 area and the 152, 151.90. I'd say if we start to see dollar selling, but I find it stabilizing at pretty lofty levels, which if the dollar continues or if the US continues to print decent numbers, I I'm not going to say 162 will be the top for the foreseeable future if I look at the longer end.
Yeah, I think it's going to be a big moment when Trump actually sits down and really puts his plans into play. How the market's going to take it. I've got to think that the positivity that the market's taken from Trump already is not going to dissipate very easily. And I think, as I said earlier, sentiment is a big deal in America. And if that sentiment continues, it can lead to a bit of an economic jump. So yeah, if the dollar's going to rip, like we said, 450 important level. I think you're right. I don't think yields are going to collapse from there, but I can see them maybe pulling back. Low 430s, 425, 420, like you. But if there is a positive vibe coming, we're going to see those going through 450 and dollar yen, as you say, probably through that 162 high in a blink.
Yeah. I just want to come back. The first phase show, we are on the flow show now, but the first phase show of the year, we were trading at $142 yen, and I said I think we close the year higher than where we open it. But the thing, really, what stands out here is that we are 12 big figures higher than then, in the knowledge that other central banks, major central banks, are cutting rates, and the Bank of Japan is hiking rates, and that was the big argument that the market had for the dollar yen to trade lower this year. Now I said, like, hang on a bit, because the speed of things may have a say in here. And then obviously the US data have been defying the laws of gravity, because we thought that this would be a year where the jobs market would start to really materially cool down. It has a bit, but look at what's happened so far this year. There's still a month to go. We can still collapse 10 big figures, but it is telling, I think, if we look at the picture, and that's why I'm saying we're stabilizing at high levels. I would have understood that we would be trading 140 or even perhaps a little bit lower in the context of this year, but we are not, and I think that for me is telling.
Yeah, and for me sitting here now, if the BOJ do hike in the December meeting, that's probably going to be a dip to buy unless they signal they're taking rates of 3% in
Look
a couple
what
of
happened
months.
at the start of 2024.
Yeah,
I think we could see an overlay of Q1 2024. That I think is in the possibilities, and then once that Q1 is over, perhaps once Trump takes the seat and everything, then I think we will need to start to be very careful with the dollar, because dollar yen is one thing, and every dollar is not the same dollar, as we have already seen so many times. But I think we for the long term we are going to start to be a bit careful with the dollar once we know what Trump wants to do, especially if he goes like on a really hawkish path,
yeah, very much so. And he's still going to solve the Ukraine-Russia conflict. So
In a day,
that'd be another thing. If he does that,
he
I keep
said, yeah,
saying
in
it.
a day.
Is what?
He said in a day, one day he's going
In
to.
a day, apparently, yeah. But as I keep saying, if touch wood, let's hope he does first and foremost, because that will mean the end of the conflict. If he does, as I said, we're going to see a risk rally, the likes of which you haven't seen for a long, long time on that front. So keep that in mind. Right, I'm going to look at one more before I hand it over to Mr. K-Man. Aussie Kiwi is a trade I'm continuing to play. I've been shorting this one since the beginning of October. Having a discussion with one of the chaps in our chat room, just asking some questions as to what I feel about this one. Obviously, we've got the RBNZ coming up this week, expected to cut 50, so it won't be a shock if they do a 50. My main reasons for playing this one are twofold. One, I think that, as per usual, the RBA are behind the curve. At the moment, they've got the data to back them up, but I think if the data starts turning, they're going to be forced to cut rates quicker than they expect. Secondly, we've been playing this range for give or take 10 years. Okay, it's fairly wide range, but we've had moves up to the top of this range. So technically, I don't see any reason for any big changes why these ranges should break. Doesn't mean it won't break, but I'm happy to play the top side of this big magnet level, the 108 level, which the price has always seemed to come back to time and time again. Again, doesn't mean it's going to happen this time, but I'm trading on the technicals as well. I'm happy to trade this up to the top of this range, to this 114s area. I'm managing my risk, so I'm not throwing the house at this one. I'm actually, as I said to the guy in the chat room, I'm keeping this roughly less than half what I would normally go for a longer term trade. But for now, yeah, I can see potentially further upside coming for this one. So I'm keeping my risk contained, and I'm managing the position a bit more than I would normally, offloading on dips and so on and so forth. So yeah, we could well get a bit of a spike through here on the RBNZ, this prior high 111.75.80ish, which has been a bit of a level. So I'm not ruling out we're going to move up to the 112s on the back of the RBNZ if they are a bit dovish still after doing a 50. But yeah, I'm still happy to play this one. As I say, technically, we've got a big range in play here, and I do like playing a range now and again. Right, Mr. K, I'm going to bounce it over to you, mate.
You.
All yours.
It's traditionally, let's have a look at those metals. Oops, hang on, because I did a miscue on another screen. Sorry. Yeah, so we had, I said last week, 2710. I've been offloading some of my longs against it. We had a bit of a blip open in sympathy with the rest of the dollars being lower, but it does also seem that, like, when you talk about gold is somewhere about a risk instrument as well, right? We heard from Russia, but I think this is more the Bessent effect that we see today. We did come back to the 61.8 of that correction here, dipped slightly below, and now we are trying to bounce again. I think all in all, nothing really changes a lot. I think the support zone is here, the box, that's the main support zone, around 26.35.45. I'm one thing that I want to say, and I've been saying that before, but I will just repeat it. Don't stick to one price when you look at instruments like where there is real money involved, and those kind of instruments like metals or so. Don't stick, like, I mean, it's not. No, well, actually, I don't even do it in currencies, but it's not like somewhere where you go like, oh, euro dollar, for instance, is 105 the figure, and if it goes through 105 the figure, then we go 20, 30 points higher. You can't do it in instrument like metals. So I usually look at zones, all right, and I think the zone here now is 26.35.45. For as long as we're above it, then we can still see that it this kind of like, and it's a completely different instrument, but if you look at this price action, it does look a little bit like a dollar yen, doesn't it? And so we are still consolidating, or trying to consolidate at least, at pretty high levels for as long as we hold again this one. So I've let some go. I haven't done anything more with it right now. But I'm going to watch this zone. I may be tempted to load some up again. I think it's relatively temporary setback. That's what I think, but we will have to allow for any moves in out of the US, especially when the US walks in today. I think we are going to see a few moves in many instruments. If we start to break again above 2710, then I think we are going to go straight back to those prior highs. Silver a bit the same, and but silver is a bit of a surprise, because if one says that Bessent is a positive and impacting less directly, perhaps, or supporting less supporting the direct tariffs, because somewhere is the treasurer who's probably going to have to tell the Chinese that they slap 40% tariffs on their cars or so. But if he's less um, hawkish on the tariffs, I'm just kind of surprised why silver is actually not behaving a little bit better than gold in this scenario, especially looking at the rest of the dollars, obviously. But anyway, I mean, I think this is a bit of a range right now. As I said already last week, we are going to have to get back above 31.50, 60 to continue to go. Otherwise, I still think there is a fair chance that this box here, 29.65, 30.15 or so, half a dollar wide, is going to be retested. As the people know in the room, I am just slightly got a bit of that Aussie, because I thought Aussie was holding pretty well, and I'm not overly surprised, but I'm actually like wondering why Aussie is not at the same level of the degree of buoyancy than the euro is, for instance, this morning. But we're still like consolidating here. I still think overall, if you look at overall, despite it is bouncing today, but overall, Aussie is doing okay if you look at this kind of euro Aussie, and it is rebounding. But for as long as we stay below, let's say 161.40 or so, I could still see the Aussie outperforming is a big word, but holding relatively well. This is one that I'm actually looking at for more of a year-end play already. I do think that if we hold above 64.80, 64.40, there may be a bit of a bottom forming in, and we may see slightly higher levels into year end. So this is more of a bit of a medium term one. I don't have that much to show. The only thing is we can only watch and see what happens. The positivity is clear on the S&P 500. We are very close, still hanging very close to the all-time highs. I've got a bit of more extension in the 61.5. 6,150 zone, and why not, go and have a visit now that we know Bessent is going to take over. If anyone else wants to look at something, be my guest, because I'm not looking at too much else. I still see that the Kiwi is a pretty low-hanging fruit. But be careful today, because we also have the MSI reweighting to do. There's a bit of stuff to do in the currencies today, and if you see some surprise demand in the Kiwi, if you see some demand in the Kiwi today out of the blue, don't be surprised. That's the only thing I can say about it. And with that, Ryan, back over to you, mate.
Thank you very much, mate. I think that's got us all up to speed for the week. We know what's coming, we know what to look for, and we've got a good handle on some of the levels. So thank you very much, as always, Kay. Thank you for all you boys and girls who are watching us via Twitter. If you do want to take part in the conversation here, then you can do via Zoom. Just go to ForexAnalytix.com, look up the webinars, and you can see all the different webinars we have, and you can gain access to the chat function in those. Have a great day, everybody. Have a great week, everyone. Thanks for coming to the Flow Show. Thanks, Kate, and we'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.